We're about an hour into the US trading day, and it's time for a quick reset. I'm Grant Mercer, this is Storm Stock Solutions, and we're here to bring some clarity to the chaos in today's markets. The big new headline hitting the tape this hour is macro. According to reporting from MarketWatch, third quarter US GDP was revised to a 4.30% annual growth rate, the fastest in about 2 years. That's a strong, backward-looking read on the economy. But the same report flags that the long government shutdown in late 2025 is likely to drag on growth in the current quarter. So, how is the tape reacting? A 4.30% print tends to support the soft landing or resilient growth narrative that equity bulls like. But it also keeps the focus squarely on how long the Fed can stay easy if the underlying economy still looks this firm. Traders watching rate-sensitive areas like growth tech, small caps, and housing will be parsing whether this strengthens the case for a higher-for-longer rate path, or if markets shrug it off as backward data given the shutdown hit afterward. On the corporate side, one of the more notable movers in the news flow is ServiceNow. MarketWatch reports the company is buying privately held Armis for about $775 billion, a big bet on cybersecurity, as it tries to build what management calls an AI control tower. Deals like this often spark activity across broader software, cyber, and AI infrastructure, names as traders handicap who could be the next acquirer or target. It also reinforces a theme we've been talking about all year. AI isn't just about chips and data centers. It's about securing everything those systems touch. In the background, there are a few under-the-radar themes traders are talking about more quietly. One is gold and precious metals. MarketWatch notes that strategist Ed Yardeni, who called gold's move above $4,000 by year-end, is now floating a potential path to $6,000 by the end of 2026, if conditions line up. Professional investors will be watching whether today's fresh highs in metals are a blow-off top, or the middle innings of a longer-term move tied to currency debasement fears, rate expectations, and geopolitical stress. Another sleeper theme involves quantum computing. A MarketWatch piece compares quantum stocks today to where AI leaders were 5 years ago, with the Pentagon framing quantum as a kind of modern Manhattan Project and China just nanoseconds behind. None of this is a call to chase speculative names, but it's a good example of a long-duration story that could transition from niche to mainstream if funding and real-world deployments accelerate. We're also seeing stock-specific interest in more defensive corners of the market. Kroger, for example, just boosted its stock buyback program even as the shares appear headed for their worst month in 3 years, according to Tommy Kilgore's coverage. That kind of capital return move from a staple grocer can draw in value and income-oriented traders who focus on buybacks, dividends, and balance sheet resilience, especially when market leadership is narrow. Looking ahead to the next hour or two, the key is whether that 4.30% GDP figure continues to support risk appetite, or instead nudges yields higher and cools some of the more speculative pockets. I'll be watching the reaction in cyclicals versus defensives, any follow-through in gold, and whether M&A and cybersecurity sparks a broader rotation within tech. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady.